Hi everyone, welcome to today's trade of the day. And for today's trade of the day, we'll be looking at gold. So if we're looking at gold, let's take a look at gold on the weekly time frame. On the weekly time frame, I can see that gold used to be on a descending downtrend. Over here, you can see you can draw this descending trend line. However, you can see after price has made those lower highs and lower lows, it seems like price has broken through the descending trend line resistance, looks to be pulling back before pushing to make the next move upwards. So what I see on gold is a reversal, okay, from a descending trend line, and now it has been broken to move to the upside. And if you look at it on the daily, right, on the daily you can see over here, I see that a double bottom has been formed, all right, on these 2 points here. All right, price made a push down and it reversed. All right, tried to push lower, but it reversed again, making a double bottom, which is a pretty clear sign that a reversal has happened. All right, so what we're going to do is just to go on the 4 hours. On the 4 hours, all right, let me just remove this trend line. All right, we can try and find some entries for gold. All right, so for gold, I can draw this ascending trend line really quickly, and you can see that price is still holding above the ascending trend line support. All right, so the price structure seems to be still pretty bullish. Right, we got this low, this higher low, higher high, a higher low, another higher high, looks to be making a new higher low before pushing to the upside. All right, and for now, all right, we can find a potential entry, and I see this potential entry right here. All right, it looks like a horizontal pullback support where price tried to break above as a resistance multiple times, and now price has finally broken above and looks to be pulling back to retest this support, which is also in line with our ascending trend line support. And in fact, if we were to draw a Fibonacci retracement from this low all the way to this high, you can see that price, the level is in line with our 61.8% Fibonacci retracement. All right, so this is a potential entry for us. Let me just change that to our buy entry. Right, let me just change that to buy entry over there. All right, so after we have our buy entry, the next level that we need to look out for is our stop loss. And for our stop loss, I can put it just slightly below this last low over here. Let me change that to stop loss. All right, because if price was to break through, all right, below the buy entry, below the ascending trend line support, our idea would be wrong, all right, and we want to get out the trade as soon as possible, possibly try to get out at break even. All right, so this is our stop loss, and after we have our stop loss, we need to look for our potential take profit levels. And right, and I have two possible take profit levels, 1 and 2. All right, so for this take profit level, let me just change both of them to take profit. All right, take profit 1 and take profit 2. All right, so this first take profit is very normal take profit, right, at our swing high. All right, so I would just put it slightly below the swing high. All right, just in case price doesn't actually reach that level, it just tends to move away before it reaches that level. We can still take profit on time. And our second more ambitious take profit will be up there at negative 27.2%. All right, after price has retraced to the 61.8%, it could push higher to make the next high at the negative 27.2%. And if I were to take an extension from this low to this high and then back down to this low, let me just adjust that. All right, let me just change that. All right, you can see the 100% is pretty close to the negative 27.2%. So that entire area is a possible area to look at for our second take profit level over there. All right, so finally, we'll just take a look at the indicators, see what the indicators are saying. I would like to use moving average. All right, I don't like to use 9 because it's too close to the price. I will use something like 89. Right, I use a Fibonacci number, all right, to find the natural moving average. And you can see that the price pretty much respects the moving average. Every time it comes back down, it pushes back up again, comes back down, push up, and it respects it nicely. So you can look at the moving average as kind of support, and it's pretty close to our buy entry as well. And price is still holding above the moving average support. So what we're going to be looking to do is to wait for price to pull back to our buy entry, where it should bounce and push to our first take profit, hopefully to the second take profit to make the next high and continue with the bullish trend. All right, so that's all I have for today's trade of the day. All right, I wish you guys all the best. Trade safe, stay safe, and I'll catch you guys next time.